Welcome back to the deep dive. So the crypto markets in May 2025, Finance 360 is saying they're definitely heating up.
Yeah, there's a sense of that. And we've got some interesting sources today to kind of unpack what's happening.
Exactly. We're diving into an article from The Cryptonomist about a new crypto wallet. It's called Best Wallet, and its token, Best T.
Right. And then there's some coin market cap data on another token, LEVI. Looks interesting.
And finally, a big one, a really comprehensive 2025 Global Crypto Regulation Report from PwC. It's hefty.
So our mission today really is to sift through all of this and pull up the key signals for you. What's actually significant?
We want you to get a solid feel for the current crypto vibe, understand this new wallet, maybe see what's up with this LEVI token, and crucially, get a handle on the shifting sands of regulation worldwide.
Sounds good. Where should we start? The wallet.
Yeah, let's jump right into Best Wallet. The Cryptonomist article describes it as a really versatile new multi-chain crypto wallet app.
Multi-chain is definitely the buzzword there.
Yeah.
And they're not messing around support for over 60 blockchains.
Yeah, Bitcoin, Ethereum, BNB, Solana, XRP, Avalanche. I mean, the big names are all listed.
And what makes it stand out? Beyond just supporting lots of chains.
Well, the focus seems to be on ease of use. They talk about simplified portfolio management, across all those different assets.
Okay, that's always a plus.
And direct integration with dApps decentralized applications. Plus, and this is pretty key, I think, you can apparently buy crypto right in the app with a credit card.
The on-ramp. Yeah, that definitely lowers the barrier for entry for a lot of folks who are deep in the weeds already.
Absolutely. And they're making a pretty bold claim, lower transaction fees than MetaMask.
Ooh, okay, that's a direct challenge. We'll see how that plays out.
Plus things like QR code deposits, withdrawals, built-in multi-chain swapping, and bridging too.
Right, the bridging. So basically moving assets between, say, Ethereum and Solana without leaving the wallet.
Exactly. That kind of built-in interoperability, that's pretty convenient. It avoids hopping between different platforms.
Definitely a pain point for many users. So simplifying that is smart.
Agreed. But here's what really caught my eye. They have a built-in pre-sale aggregator.
A pre-sale aggregator inside the wallet itself? That's new.
Yeah, and an upcoming tokens feature. So you can apparently discover and participate in pre-sales directly within the app.
Okay, that offers convenience for sure. Discovering new projects, participating early, I get the appeal.
Keeps transactions within their platform too, which they position as a security benefit.
Well, potentially. It centralizes things, which can be convenient, but also means you're really trusting their security model for those early, often risky investments.
True. The article says you can see project details, roadmaps, token info, potential price changes, and then buy in with crypto or even a bank card.
And I assume the Best token plays a role in all this.
It does. It's the native utility token. The article mentions things like reduced fees within the app if you hold or use Best.
Standard utility token stuff. What else?
Boosted staking rewards are mentioned. They quote a, frankly, very high APY, 143%. You always got to be cautious with numbers like that, though.
Always. High APYs often come with high risks or inflation. And governance rights too, I imagine.
Yeah, governance rights. So token holders can vote on the platform's future direction.
Okay. And how's the project funding going?
Pretty well, it seems. The pre-sale reportedly raised over $11 million, with the token price at 0.0243.
$11 million is not insignificant for a pre-sale. Show some interest.
And they're running a free airdrop program, too. The usual stuff: engage on social media, download the app, register, complete tasks, earn points for Best.
Standard community building tactic. Get people using the app, create some buzz.
No, security. They emphasize that it's non-custodial.
Right, so users control their own private keys. Not your keys, not your crypto, as they say.
Exactly. So you hold the keys, the responsibility is yours. They also mention advanced security features against malicious transactions, but details are a bit thin in the article.
Okay, so non-custodial is good for user control, but it puts the onus on the user to protect their seed phrase properly. Lose that, and you lose your funds.
Definitely. Now, analysts, well, some are apparently quite bullish on Best long-term. Predictions mentioned are like $5 to $10.
Wow. Quite a leap from 2 cents.
Yeah, big leap. But obviously that depends entirely on, continued development, actual user adoption, the market playing ball, lots of ifs.
Absolutely. Predictions are just predictions, especially in crypto.
Yeah.
But the potential drivers would be that ease of use, the integrated features, maybe grabbing market share from competitors.
If you're curious, the pre-sale site is mentioned as bestwallettoken.com. Okay, shall I pivot to the levi token?
Yeah, LEVI. Based on CoinMarketCap, this one's inspired by an anime character, Levi Ackerman from Attack on Titan.
That's right. So immediately, community is going to be a huge part of this. It's pitched as a decentralized community on Ethereum.
Interesting angle. Using existing fandom can be a powerful community building tool. Their core principles are listed as dedication, teamwork, resilience, mirroring the character.
Makes sense. They talk about something called chart tokenomics, a unique distribution system focused on community engagement transparency.
Chart tokenomics. Sounds catchy, but the preview doesn't actually explain how it works, does it?
No, not really. It points towards an upcoming white paper for the actual details, the tech, the governance, the long-term vision.
Right, so until that white paper drops, it's hard to say much about the substance there.
Yeah.
Could be innovative, could be just marketing. Need those specifics.
They are very active on Twitter, pushing that for updates and community building, which fits the theme.
Standard playbook for community tokens. Twitter, Telegram, Discord. That's where these things often live and breathe. A strong community can be valuable.
The CoinMarketCap preview also gave a market snapshot. Bitcoin around $94K, Ethereum $1,800-ish, XRP $2.16, some others. But no price listed for LEVI itself.
Yeah, the lack of a price probably just means it's very new or has low trading volume, not yet fully tracked maybe. The other prices just give context for that moment in time.
Gotcha. It does mention supply, though. Self-reported circulating and total supply are both 1 trillion tokens.
1 trillion. That's a lot of token.
Right. What does that usually imply?
Well, a very large supply often means a very low price per token, at least initially. It can sometimes be a psychological thing. Owning millions or billions of tokens feels substantial. It also means significant price increases require huge market cap growth. And if circulating equals total supply, it might mean no more tokens are scheduled to be released.
Okay, interesting dynamics there. So lots depends on that white paper and building real engagement beyond the initial hype.
Precisely. Community is key, but there needs to be some underlying value or utility eventually, beyond just the meme or the character association.
All right, let's shift gears dramatically. The big picture. Global crypto regulation. That PwC report from 2025 paints a picture of, well, increasing clarity, wouldn't you say?
Definitely. The overall trend is towards more defined rules. Governments worldwide seem to be moving past the should we ban it phase and into the how do we regulate it phase.
Trying to find that balance, right? Encouraging innovation, but also protecting investors, ensuring financial stability, market integrity, the usual goals.
Exactly. It's a complex balancing act.
Yeah.
And a huge piece of this puzzle, especially recently, is the EU's MiCAR.
Right. The markets in crypto assets regulation fully lives since the end of 2024. It aims for a single harmonized rule book across the EU.
Yeah, MiCAR is massive. It covers everything from the crypto assets themselves to the exchanges, the wallet providers, basically any crypto asset service provider or CASP.
So authorization, passporting rights across the EU, supervision. It's comprehensive.
Very. It lays down rules for white papers, what info projects need to provide. Big focus on consumer protection too, like safeguarding client funds, segregating assets.
And market integrity stuff, preventing manipulation.
Absolutely. Rules against market abuse. And importantly, strong anti-money laundering requirements. That includes the FATF travel rule.
Ah, yes, the travel rule. Requiring VASPS virtual asset service providers to share sender and receiver info for transactions.
Exactly. Bringing crypto AML closer to traditional finance. And the EU is setting up a new central anti-money laundering authority, AMLA, coming online probably 2025-2026 to oversee this more effectively.
The report mentioned transitional periods for existing businesses to get compliant, but it varies by country.
That's right. Not a single deadline for everyone. Countries like the Czech Republic, Denmark might have until mid-2026. Ireland, though, a shorter window, maybe end of 2025.
That sounds like a headache for companies operating across the EU.
It definitely adds complexity. You need to track the specific national implementation timeline for MiCAR in every country you operate in. It requires careful planning.
Okay, so MiCAR is huge for Europe. What about other key themes globally? Stablecoins seem to get a lot of attention.
They do. Regulators everywhere are scrutinizing stablecoins, mainly because of their potential link to the traditional financial system and payments. The focus is on ensuring they're actually stable, properly backed by reserves. MiCAR has specific rules for them too, of course.
And you mentioned AML. That seems to be a universal focus, right? The travel rule, cracking down on anonymity.
Yes, a huge push globally. Implementing that FATF travel rule is a big part of it. Also targeting things like mixers, services designed to obscure transaction trails, and really enforcing know your customer KYC checks.
Makes sense. Data governance is another area mentioned, requiring better record-keeping encryption.
Yeah, as the industry matures, regulators expect more robust data management, audit trails, security. Basically, treating customer data and transaction data with the same seriousness as traditional finance.
And this all ties into the idea of crypto integrating more with TradFi.
Exactly. Authorities are, in many cases, trying to facilitate that convergence, setting up frameworks so banks and traditional institutions can engage with crypto more safely.
Speaking of banks, the Basel Committee, the BCBS, has standards for banks holding crypto, right? Coming in by 2026.
Yes, global prudential standards, basically rules on how much capital banks need to hold against their crypto exposures. They split assets into groups.
How does that work?
Group 1 is for assets that meet certain conditions, potentially including well-regulated stablecoins. They get more favorable capital treatment. Group 2 is for everything else, like unbacked cryptos or stablecoins without robust stabilization mechanisms. They get a much more conservative, higher capital requirement.
So, incentivizing banks to deal with less risky, more regulated crypto assets, if they deal with them at all.
Pretty much. It reflects a risk-based approach.
And the FATF, the global money laundering watchdog, is keeping tabs on how countries are doing with implementing all these rules, like the travel rule.
They are. And the report notes FATF is concerned about the pace things are moving a bit slowly globally, and illicit use of crypto is still a major problem.
So pressure is on countries to step up implementation. What about the Financial Stability Board, the FSB?
They're looking at the bigger picture risks: market integrity, cross-border issues, operational resilience like exchange hacks, and how crypto connects to the wider financial system. Stablecoins are a particular focus for them too, regarding potential vulnerabilities.
Okay, so those are the big global themes. The report also dives into specific countries. Let's touch on a few key ones. The US, still figuring things out.
Seems like it. Progress, yes, but ongoing debate about who regulates what, CFTC versus SEC. There's new accounting guidance forcing fair value measurement for crypto assets held by companies.
That's significant for corporates holding Bitcoin, for example.
Definitely. And a big focus on stablecoins and enforcement actions against illicit finance. Interestingly, while they're researching a CBDC, a digital dollar, there's currently an executive order blocking actual issuance without Congress saying yes.
So, caution on the CBDC front. What about the UK?
The UK government seems quite committed. They view crypto as here to stay, planning more legislation, exploring digital gilts. The main financial regulator, the FCA, has a roadmap.
And they passed a big law last year.
Yeah, the Financial Services and Markets Act 2023. It gives powers to regulate crypto, including stablecoins as digital settlement assets. They're aiming to regulate all crypto, not just pieces of it.
Ambitious. They also have a sandbox for digital securities, and the travel rule is in effect there too.
Yes, the digital security sandbox to test innovation. And yes, travel rule implemented. They're also planning a specific market abuse regime for crypto. So, quite comprehensive.
Okay, maybe just a couple more quick hits. Argentina?
Argentina's regulator is issuing warnings, focusing on risks. They've set up a registry for VASPs to comply with FATF. And notably, stablecoins are not considered legal tender there.
Australia.
Australia's focus is on regulating the platforms, the DAPs. Proposed rules for payment stablecoins, AML law updates. Interestingly, the central bank isn't convinced about a retail CBDC yet, but looking at wholesale uses.
It really shows the diversity of approaches, doesn't it?
Absolutely. And the report covers so many more: Bahrain, Brazil, Canada, Cayman Islands, Hong Kong, India, Japan, UAE. The list goes on.
Each with its own flavor, like Dubai and the UAE becoming a major hub, Japan focusing on Web 3.0, Switzerland with its established principles.
Exactly. The key takeaway is that regulation is happening everywhere, but it's not uniform. It's a patchwork. And businesses operating globally need to navigate that complexity.
So let's try to bring it all together. We've got a market that feels like it's picking up steam.
Yeah.
We see new tools emerging like Best Wallet, trying to simplify things, maybe pushing boundaries with features like integrated pre-sales.
And then you have tokens like LEVI really leaning into community power, though the long-term substance needs watching.
And underpinning all of it is this rapidly evolving, increasingly complex web of global regulations.
That's the crucial context. Different places are at different stages, creating both hurdles and potentially opportunities for those who can adapt.
Businesses definitely need to stay nimble. And for individuals, well, you need to be aware of the rules where you are and where you're interacting.
Absolutely. Compliance is becoming much more front and center.
Okay, so here's a final thought to leave you with. As we see this regulatory clarity increase, and as crypto continues to merge, or at least interact more with traditional finance, what new opportunities might pop up?
Good question.
And what new challenges for individuals, for institutions, and how much will these user-friendly innovations, like the simplified wallets we talked about, actually drive the next wave of adoption and integration into everyday life?
Yeah, how does the tech innovation interact with the regulatory push? That's definitely the space to watch in the coming years.
Absolutely. Lots to think about. Thanks for taking the deep dive with us today.